Hello, welcome to the weekly technical analysis review. I'm Selena Nicholas, technical analyst at xm.com. Today's Tuesday, June 6th. We'll look at some major pairs on the daily chart. We'll start with EURUSD. It's looking neutral here in the short term, but it's neutral to bullish because the medium term structure is bullish, as we can see, higher highs, higher lows. And there was a bullish crossover of the 50-day moving average with the 200-day moving average. And since a little pause around the 1.12 level, prices seem to have regained upside momentum. And we can see that the indicators are still bullish, RSI above 50 and MACD above 0. But for now, it seems that RSI is starting to just move sideways, indicating that there could be some consolidation in the near term. Of course, 1.13 is a very key resistance level that needs to be cleared. And then above this, we could see a strengthening of the bullish bias. But otherwise, as long as the market remains above the 200-day moving average, then the overall bullish market structure will remain intact. Now let's turn to the pound-dollar pair. We can see that it's been neutral recently around the 1.29 level. So basically, pound-dollar has been trading in a range between 1.2760 and 1.3045. So the current movement is viewed as a consolidation phase, but the medium term is bullish. We can see a rise since March, higher highs, higher lows. Now let's take a look at dollar yen. Dollar yen turning a bit more bearish, especially after the drop below the Ichimoku cloud. That's a bearish signal, and also falling below the 200-day moving average is giving a bearish bias. If we have a daily close below the 110 level, this could put the pair at risk for a deeper decline, and this scenario appears more likely with RSI being below 50 and trending down. Also, that's highlighting the bearish bias in the market. Turning to the dollar index, we can see it's looking bearish in the medium term. It's been falling since January, and it's now at a 7-month low. We had a bearish crossover of the 50-day moving average with the 200-day moving average. And for now, in the near term at least, there is a pause in this decline. But as long as this support, we have a Fibonacci level 61.8, that would keep the dollar index underpinned for now. But as we can see, the rise from April 2016 all the way up to the high of 103.81 early this year, that's been retraced more than half. So we're now at the 61.8 Fibonacci of this up leg. Turning to Aussie dollar. Aussie dollar neutral in the near term. It shifted from a bearish bias. Now it's consolidating, but it's been capped at 0.75. That's an important resistance level. We did have a bearish crossover of the 50-day with the 200-day. The market would need to clear this 0.75 resistance to shift to a more bullish bias. But as long as the Aussie dollar can stay above the low of 0.7328, and this was the low in last month in May, the pair can remain underpinned in this neutral phase and could even have room for recovery We can see RSI is popping back above 50, but if upside momentum doesn't gain any traction, we could stay in this consolidation phase and maybe even turn back down. Gold, it's been making higher highs, higher lows. We're now approaching key 1300 level. We saw a pickup in upside momentum today, but the high at 1295.38 needs to be cleared in order to gain more upside momentum. But it's looking bullish overall in the medium term, because we did have a bullish crossover of the 50-day moving average above the 200-day. And there's important support now at this 200-day moving average, which is close to the 1240 level. But if for some reason we see the market moving even lower below this, the low at 1214.17 is very important. Breaking below this would start to shift the bullish market structure. But momentum indicators for now are bullish. We can see RSI and MACD being bullish. So that's it for now. Thanks so much for watching. Have a great day.